Howdy doody dandy, folks. Back on the earnings train, as we like to be with Roku right now. Saw a very unfavorable trading session today. At one point, down over 8%. Pretty wild. Just reported earnings in the after hours here, and up pretty well a makeup, 7.68%, made up for the downward movement today. So actually sitting close to even on the day, which is kind of crazy after the day they've had. So pretty wild stuff, but let's get into these earnings and see why the stock's popping back up. Obviously, you expect pretty good numbers. We are in the era of streaming. There's no doubt about it. Roku obviously on one of the forefront of that, really. Video streaming, huge right now. And Roku, that's right, they're taking charge, baby. GAAP EPS of 54 cents, beats by 67 cents. Quite incredible, because if you remember, this company has historically not been profitable. Pretty nice to see those numbers from a standpoint of if you're an investor in this company. You'd love to see that profitability, so the question is if they're able to keep that up or what that might have been. But that's pretty nice. That's pretty nice. And revenue, I mean, nothing bad to say there. $574 million, up 78.9% year over year. Beats by $82 million. I mean, that's a huge beat for them on a revenue standpoint and a massive year over year growth, which is quite incredible. They're going to be going up against some tougher comps this year, but overall the business, I think, as a whole is still going to be showing some good growth just because of the nature of the business and where the whole industry is headed. Platform revenue increased 101%. Wow. Gross profit was up 132%, as you saw, year over year. And they added 2.4 million incremental active accounts in quarter one of 2021 to reach 53.6 million. It's a good number of ads there. Obviously, many different ways they can add, either whether it be built into TVs, as some TVs have built-in Roku, or their streaming sticks from the Express to the Ultra to the whatever else. Forget the third one. Express something Ultra. Premiere. No, I don't know. Can't remember it, but whether you're using one of the streaming devices or getting a TV or device that has built-in Roku, obviously that's where you're getting these added users and accounts. Not bad. Streaming hours increased by 1.4 billion hours over the last quarter to 18.3 billion. Again, as I said, it's the era of streaming, okay? Unemployment's still relatively high. People are just, they're watching a lot of content right now. It's crazy. People just, that's what they're doing now. They're going away from their traditional cable. They're spending a lot more time on streamed content. Average revenue per user came in at $32.14, which is really nice, actually, up 32% year over year. And they raised $1 billion through an at-the-market stock offering, capital raise. Not a huge fan of capital raises typically, but sometimes you got to do what you got to do, especially when you're a company that's not profitable like this. Overall net revenue is up 79%. Really nice. Gross profit we saw was super nice. No doubt about it. Slowdown in active accounts, which grew 35% year over year. A slowdown in active accounts. Surprising that doesn't necessarily draw people away. Just because if you look at the other companies, a company like Netflix, when they show a slowdown in account growth, their stock gets hammered like no one's business. But Roku does it, and people aren't that concerned. It just goes to show we're in a market that is very irrational. It's kind of hard to predict some of these things. Investors just pick and choose which ones they want to go up and which ones they want to go down. And right now, it's pretty crazy. Pretty darn crazy. If you look in terms of revenue breakdown, platform revenue up 101%, and player revenue 107 million, up 22%. Again, the player revenue will be the devices, while the platforms, obviously, the platform itself. Nice. For quarter two, the company is guiding net revenues of 610 to 620 million. Consensus is only 546 million. Well, I mean that's a pretty massive guidance beat. So overall, I see why this stock's going up. I mean, you tie in a really bad performance during the normal trading session, it makes sense why it's up as high as it is. But the reason why it's in the green is because they beat on the top line, bottom line, and they continue to see some good guidance growth here, which is nice. Gross profit, you never get untired. 295 to 305 million. Net income still expected to be positive at 10 to 20 million. Going to be a very small EPS number, but expected to be positive. Pretty nice. Yeah. I mean, I will take it. So let's look at some of the shareholder letter here. Nothing super significant in the shareholder letter, but they don't give a good press release. They're more of a shareholder letter type of company, just so you know. But a lot of the stuff we've already covered. Nothing super crazy. All the bullet points, ones we've already looked at. It is fun to look at these charts and see really how they grow quarter over quarter because it's a good estimate of where they're doing. You can see how consistently you've seen, you're just a little tired there. Platform revenue growth as well as player revenue growth. Consistent growth there. Player revenue saw quite a dip down, and that's something you're just going to face, unfortunately, as time goes on. You will eventually reach a point where it's hard to grow the player revenue because it's going to be hard to sell more units as more people already have them. So there is a limit to the number of units that they can sell, so that needs to be put into consideration there, where platform revenue should continue to rise. But obviously Q4 is so much higher than Q1 because of the fact that, well, it's the time where people are buying potentially these items as gifts. I was not tired before this video, and guess what? I'm absolutely just dying right now. So we obviously saw the outlook too. Nothing super crazy. Obviously, the shareholder letter, it's the same stuff every single quarter with these shareholder letters. They go into the business, what's going on with it. I'm here because I want to look at, I think we know what. Well, first off, let's look at this net income line. Net income. I don't buy it. I'm curious because their net income pretty significant here. It is probably, that's in millions. Okay, $76 million in net income, as I've highlighted right here. That's a good highlight. Don't you worry. It took me a while to understand because the reason being I'm more tired than I've ever been all of a sudden when I felt just fine before this. But $76 million, it's incredible for a 3 months ending period for them. They've never seen profitability. Last year's quarter, they'd lost $54 million. So that's a significant swing around. Significant. So good to see that. I like to see what that I like to see what that EPS equates to in terms of actual net income always. Let's look at the balance sheet after a finally profitable quarter, but you saw a capital raise, so we'll see obviously some growth in assets. And yes, there is cash and cash equivalents up quite a bit. Again, they said they raised the $1 billion. Here it is. It's in cash and cash equivalents. So total current assets did rise quite a bit, $2.75 billion compared to $1.7 billion. There's your $1 billion. Total assets in general. I'm just saying, this has made me more tired than if I were to run 5 marathons. Okay? $3.5 billion in total assets compared to $2.27 billion just 3 months ago. So there was still a growth in long term as well. You got to give them credit for that. Liabilities, I'm going to expect a rise, obviously, with the capital raise, but total current liabilities sitting at $628 million compared to $520 million. I'll take it. Total liabilities in general sitting at $1 billion compared to $942 million. So overall, they really did not seem to increase that liability line quite a bit. I mean, they didn't increase it at all, pretty much. Not bad. So stockholder equity rose quite a bit, $2.4 billion compared to $1.3 billion. It's quite a significant improvement there, no doubt. You look at the stock itself, it is trading in a market cap of $37 billion for a company that's probably going to bring in, if we're being fair, $3 billion this year. I think would be a fair estimate. Maybe. Well, yeah, let's say that. $3 billion is what I think they'll pull in this full year. Potentially a little bit higher, but that's my estimate, though. So, trading in a market cap of $37 billion. Pretty high when you think about it because it's about 12 times what they're going to pull in this year. So, can be seen as pricey, and the profitability still questionable on the company. The balance sheet's in pretty good shape. The stock, I think, is at a little bit too high of a level for me in terms of any value plays. I think it's a decent company, no doubt, for the long term. I just think, as far as valuation, I think it's a little bit overpriced right now for me. It's seen a lot of unfavorable time in the last months. But overall, you can still see in the last year up 124%, even despite being down 37% in the last couple months. So the stock's gone up a little bit too big for its britches, in my opinion. I think it should definitely fall a little bit lower to consider it. Over 300, I think, is not necessarily a good buy for this company. That's what I got for you today, and I hope you have a good one.